So I think the biggest thing when you're looking at Bitcoin, right, and this is key, is that, number one, if you zoom out on the chart, and we can see my chart here, that this, again, it's a nice bounce, but you're still in a downtrend. You're still in an overall downtrend. And I think people have to be aware of that. In addition, you have to also remember that the Fed, this is the first bear cycle the Fed is not printing money. So the question I would say is, well, what does that mean for this cycle? Is it an elongated bear market because of that? Is that if you don't have money being printed, and the stock market does decline by as much as 25% in 2023, like I'm predicting, where is Bitcoin? Where are other asset prices that are risk-on assets like Bitcoin? And I would dare say that without the Fed's printing of money, Bitcoin is still headed towards 12 to 13,000 and maybe as low as 9,000.
Gareth Soloway, a well-known technical analyst and veteran trader, has participated in and witnessed numerous bear and bull markets in stocks, crypto commodities, and currencies over the past 2.5 decades. Both in bear and bull markets, the technical analyst has always trusted the cards to guide them to the right conclusion. If you know what to look for, Soloway claims, you can use charts to accurately time the markets. Soloway, the foremost authority on the cryptocurrency market, recently discussed his bear market predictions for Bitcoin in an interview with Kitco News. In this interview, Gareth Soloway explains why he is a firm believer in the gifts of the charts.
One of the things, and we talked about this at the beginning, is I'm always analyzing the mental psychology of the makeup of investors. And when we were talking in Dubai, when I was there with you and we were doing the interview, one of the things that I noted was that the insanity around Bitcoin. In addition, another factor was I looked back at 2017's high, and one of the interesting things about 2017's high was that the high was made and it coexisted with the launch of the futures on Bitcoin. And sure enough, in 2021 in October, when we were talking, they were just launching the futures ETF on Bitcoin. And there was so much hype around this. It was going to change. All the average investors were going to be able to jump on board, even if they didn't have crypto accounts, to be able to trade the ETF. And obviously that added to the hype. So hype was number one. I was noticing it made me very uncomfortable. The same sort of hype that I saw in the late 90s, early 2000s when the dot-com bubble was going to burst. The same hype we saw in housing in 2007 before it collapsed. So when you're through enough of these bubble and busts, you start to recognize the emotional attachment and exuberance, irrational exuberance, to use Greenspan's term, of what's going on, and that is a warning sign in and of itself. So that's the first thing. I was on alert. The second thing is, if we go to this chart, notice how we made new highs from the early 2021 high, but there's something called the confirmation signal. This is something I teach in my course, the Winning Trader series. But look at how this high here, all right, notice how you closed above the high and then you reversed. And then you closed above the high here again. It tried to break out again, and you never got a higher close. So the confirmation signal, and I'm just going to give you guys a crash course in this. What basically you need to do, you have to have a close above the key pivot, which was this trend line, which you saw here and here, and then you need a secondary close at a higher high. Pivot, higher high here. Notice how that never happened over here. And to me, that was telling me institutions were dumping into it. If you think about how much irrational exuberance and buying there was from the retail crowd at these highs, this Bitcoin chart should have blown through that level if the institutions were not dumping into it. The long story short, without confirmation, it was not a true breakout. And in fact, it turned out to be a classic M pattern top, right? Double top, M pattern top, which again, in technical analysis, when you learn it, you start to pay very close attention to those type of pattern tops, especially when you have negative divergences. And let me just speak about this real quick. What's the negative divergence? The negative divergence was that in April of 2021, when you were at 65,000, you had hype. When you were at the same level in price, you had basically double or triple the hype. So what I'm saying is the hype was higher, but the price was not matching that. It was a negative divergence in price. And again, you can even look at the RSI and you can see this negative divergence building as well. So I think the biggest thing when you're looking at Bitcoin, right, and this is key, is that number one, if you zoom out on the chart, and we can see my chart here, that this, again, it's a nice bounce, but you're still in a downtrend. You're still in an overall downtrend. And I think people have to be aware of that. In addition, you have to also remember that the Fed, this is the first bear cycle the Fed is not printing money. So the question I would say is, well, what does that mean for this cycle? Is it an elongated bear market because of that? And so these are the things that you want to pay attention to. Now, if you look here as well, in 2020 and 2018, we kind of had this same sort of almost rounded bottom like we did back we just came out of, and you did have this run up, but then look at what happened to price. It came back and basically retested that $3,500 level, and I think that again is a good guidance level for what we're going to see here, and that would just be a retest. So you're looking at going back to 16,000 or so. All right, on the other side of the coin, the negative here and why I think it could go lower is that if you don't have money being printed and the stock market does decline by as much as 25% in 2023, like I'm predicting, where is Bitcoin? Where are other asset prices that are risk on assets like Bitcoin? And I would dare say that without the Fed's printing of money, Bitcoin is still headed towards 12 to 13,000 and maybe as low as 9,000. It's a bear market now induced by the Fed where they're actually sucking out liquidity. And granted, the Fed will stop hiking. I think there's probably another 25 basis points, maybe two more of them. But the bottom line is that even when they go to not raising, they're not going to be going to cutting. And that's a concern because you're not going to see that flood of liquidity. And then if all of a sudden you have stocks taking another leg lower, that sucks more liquidity out. Remember, the asset markets are tied together. People that have crypto have stocks and vice versa. And fear and panic are they're the biggest human emotions, right? That fear is going to catalyze the downside move, I would say, in Bitcoin. And that's what I'm predicting. I do think that we still have more downside on Bitcoin, unfortunately. To become a master trader, you have to get your own discipline under wraps, meaning that the keys are going to be following strict rules. As soon as you kind of go outside of your box, of your disciplines, that's where the market ends up eating you alive. So always remember, discipline, personal discipline when it comes to trading is paramount to success. The second thing is understanding human psychology. And this comes in where, many people were buying Bitcoin at 65, 67, $69,000. And obviously that was the wrong time to do it. They were doing it because they saw everyone else doing it. One of my biggest principles is when you see everyone else doing it, you do not do it. In fact, step back, and it might even be a good shortable opportunity if everyone is buying an extended chart that's making new all-time highs continually. And lastly, it's the charts, right? The charts are basically representations of human emotion. Remember, buyers and sellers are the ones that are buying. A chart goes up, selling, the chart goes down. So it's representing millions, if not, multiple millions of people in a market. And therefore, you're reading their psychology. You're reading their greed and their fear. And the charts are like a puzzle. Every piece, every time you get a new piece of that puzzle, it tells you a little bit more to do or what the chart is likely going to do. And always remember, it's all about probabilities. You want to be the casino, not the gambler. No, I'm not a momentum trader. I think a momentum trader is a gambler. And what I mean by that is that where in the momentum cycle are you? Now, if you happen to be at the very early point when there's not a lot of hype on something and the momentum is just starting, fantastic. To me, that would be a bull flag breakout just beginning. You can ride that wave. But by the time there's that crazy momentum where something's going parabolic, you don't know if you're entering at the very end of it or the middle point or 3/4 through. And to me, that's a risk that I'm not willing to take with the money that I continue to make, and it's hard-earned money. So I always say this to people is, you're making your dollars. We're working hard to make money. You don't want to take risks with it unless it's a high percentage probability you're going to be successful.
With a reading of 60, the Crypto Fear and Greed Index favors greed. As investors anticipate the Federal Reserve to roll back its aggressive rate hikes, the value of cryptocurrencies has also increased. At the time of writing, one Bitcoin is changing hands for $23,503, down from a high of $24,903 earlier in the day, while one Ether is trading for $1,640, down from a high of $1,703 earlier in the day. If so, how soon do you anticipate these exiting crypto assets recapturing these resistance levels? Leave a comment with your ideas below, and we appreciate you tuning in to Market Empire. If you enjoyed this video, please give it a thumbs up, share it with your friends, and subscribe to the channel.